When we started our business, we learned two things. Like one, when people shop online, credit is not predominantly because you want to borrow, but it's predominantly because you want to see and touch the product before you pay for it. And if you have a debit card, a little bit of problem is you're shipping this money and then hoping you get something that looks like that picture you saw online, right? So credit actually has a different kind of function, and it's not about lending. It's predominantly about like that buy now, pay later, which basically is that. But secondly, we also realized that there was a better option to credit than credit cards. What if you don't charge interest? What if you don't revolve is also a very confusing concept to a lot of consumers. It's like revolving. How long am I going to pay this off? Like, I'm going to roll this over. Like, installments are very clear. They're like, okay, I'm paying 1/4 of this every second week until I paid it down. So it's like a fixed term. It's very clear. So we wanted to create a better credit product, one that had fixed installment, that was interest free, that was easier to use.
And we should say consumers have embraced this, right?
Yes.
Certainly in the U.S., BNPL, buy now, pay later programs have exploded. I think it was partner-centric. They had this survey that's found that like more than half of Americans are currently using some form of buy now because there are many other apps and programs that do this. Your Affirms, your PayPal, as you said. And as it's expanded, for a variety of reasons, people worry that it's just another form of credit debt that people are taking on. And I want to ask you about that because I have to admit, I am one of those people that when I learned you could basically Klarna your DoorDash burrito, I was like, that seems unwise. Like, why even offer that option?
Yes, and that is unwise. I would not recommend anyone to put a burrito on buy now, pay later, for clarity. But it is also partially because Klarna in the US has become very associated with buy now, pay later. So when US consumers think about us, they think about buy now, pay later. But if you look at Klarna in Europe, we are an equivalent of PayPal. So we offer both debit-based payments, where you pay the full amount upfront, and we offer credit-based payments where you pay in installments or even finance like bigger ticket items for longer periods of time. And obviously, we have realized that in the US, there's an opportunity to offer a better debit solution as well, where people can pay the full amount. And that's what we have done with DoorDash and others. We're starting to come into places
But wait a second, you just said that's not a good idea. So yes. I feel like I have to stop you.
Yep.
I mean, I can understand business-wise why you'd embrace it.
Yep.
But a lot of us see this as a sign of economic strain, of people who fundamentally have reached the point where they can't actually pay for essentials like groceries, like their takeout.
Yep.
And this doesn't look like a good option.
Yep. But that is, again, what I was saying is that we don't only offer credit. We offer debit. Like 30% of Klarna's total volume is people pay the full price, just like
you mentioned this thing about the U.S., that people are using it a little bit differently.
Well, people associate us with it, but Klarna we want to grow our options. So to me, what's critical is every time you make a purchase, I want people to have the optionality to push debit or credit on every purchase. And the reason, and that's what Klarna does in Europe. We always offer both debit and credit, and now we're doing it more oftenly in the US as well. So the point when we go to DoorDash, people go like, oh, they're coming there with their credit option. It's like, no, I don't expect there to be much credit on DoorDash. I expect people to use our debit option to pay the full amount on DoorDash.
But why? Like, if you have an economy where prices are getting higher, right, where there's tariff uncertainty, and when your savings may be dwindling, and you have existing credit on other cards, right? Why wouldn't you click on that option that lets you split up the payments? Like, I feel like in the US, we are seeing people embrace that more.
Yes, that's true, but it's an extremely small proportion. So like we obviously, because we do this in Europe as well, we do see that like on the equivalent of DoorDash in Europe, it will happen occasionally that people put it on credit. But most often people put these on debit with Klarna, just like they use PayPal Wallet to pay online, right? And they use Klarna online to pay with us, but they pay the full price. But the point is also what one forgets in that comparison is I can go to DoorDash today and I can use my credit card. And if I do that, I actually accumulate all of my spending on credit and I get a bill at the end of the month to pay that down, and then I'm likely to revolve. So what we want to do is we want to provide a better option than credit cards, meaning that every time you make a purchase, you should have the option to choose between debit and credit like you used to, allowing you to rack up a smaller outstanding debt. In general, people owe Klarna about $100 to $150 on average compared to the $5,000 on a credit card.
In
So we just
total
believe-
loans or any single little loan?
No, per consumer outstanding. On any given moment, an outstanding credit card customer will owe about $5,000 in average in the US. A Klarna customer will owe about $100 to $150. So the point is that, like, what we believe, if you take like 20 years down the road, let's just imagine Klarna is on every place where you buy something, just for the sake of it. I would argue that we want people to use debit more often and then occasionally use buy now, pay later, rather than everyone using a credit card where they put all of their spending on credit, right? Which is what you do with a credit card. You put all of your spending on
But
credit.
what if you're just doing it all at the same time, right?
sure.
And you do see a lot of those people who are in the category of delinquent or who are paying you late. They're stacking those loans, right? So they've made a small purchase, a Klarna purchase. They've maybe made a medium-sized Affirm purchase. They have a Visa somewhere with even more purchasing. Like it feels like you can separate them out and say one's better than the other when actually the Venn diagram is a circle. There's people
Yes, that's a
who
good
are
point.
just
You're very accurate.
accumulating debt.
Yes, you're entirely right. That problem has always existed with credit cards. There's people that have 5 credit cards and rack up, et cetera. So it's not necessarily a new problem for the credit industry. But you're totally right. And I think that to really understand, like, are we driving a more healthy credit behavior compared to the traditional solutions, the only thing you can look at in the end is the losses. And if you look at our losses at Klarna, our losses are about 20 to 30% below credit card industry standards. So we do see that consumers that use this product overall, looking in total, is actually racking up less debt than if they use only credit cards. So to me, that's, like, from my perspective, enough of evidence that this is a better solution in general. That doesn't mean that you won't be able to find single consumers and point to the fact that, to your point, they have used and build up debt on multiple services. And I think that there are one problem here has been that traditionally the way that banks try to avoid credit card over indebtedness was through credit bureaus. And the information in the credit bureaus may be very outdated or very old.
Right. So to be clear, every time I'm using my credit card, either well, paying my bills on time, or not so well, not paying my bills, the banks could report that to credit bureaus, and that could hurt me down the line. It was a way of sort of that report card, which we all deal with, is a way of keeping us in line.
Exactly. And today, for example, Klarna applies some newer, more modern technologies than credit bureaus to make that decision of whether we can extend credit to you or not. So one example of that is today people connect their bank accounts, allowing us to get access to their real-time financial data, like what you're actually spending today and how much you're spending and what your income is, rather than relying on a year-old information. And this is where the innovation is happening, that we're trying to be even smarter on how you take those decisions to prevent people from getting into those situations. But generally speaking as well, I would say that, like, because we don't charge interest, the interest here is paid by the merchant, right? They pay for the fee of these loans. So generally also these loans, because they are smaller, shorter term, fixed term, and interest-free, everything else equal, is a healthier type of loan than the credit card debt that you can rack up. And that was what I meant back to the McKinsey study in 2015. They estimated that in the US, there's about 20% of consumers who don't care about loyalty points and don't care about, all the fancy stuff that credit cards have been providing to kind of bring you into their system. But they have felt they have lost track of revolving. They have gotten themselves into credit card debt and then taken themselves out of it. And they only want to use debit. They don't want to use these credit cards. They want to use debit. But occasionally they need a little bit of credit, or they want to use occasional little bit of credit. And that's really the category of consumers that Klarna is coming into. These are what we call the self-aware avoiders. We always recommend, like, use debit predominantly, and that's why we also want to offer debit as a payment method. But then occasionally you can get access to a fixed installment.
Let me come back to something that you said about how credit card companies kind of they report information because over time that's how everyone can kind of keep track of who's paying their bills on time. One of the ways, as I understand it, that Klarna has tried to get people to pay is like you have high fees for being late. And there are people who feel like, oh, I thought I was getting this interest-free loan, but in the end, between the fees, or maybe I struggle to return the item, that there's actually hidden costs to doing this. And because it's frictionless, you don't totally engage on that in the moment of your purchase.
Yep. That's very fair. And if you look at all banks historically, there's been overdraft fees, late fees, and so forth, right? So it's not uncommon. But the interesting thing that people don't know is when we launched our product in the UK, we actually decided to go entirely without late fees. We didn't have any late fees or no interest whatsoever. We only relied on the merchant fee that the merchant pays for offering Klarna. And unfortunately, after testing that for a few years, we also realized that if there were no consequences to not pay on time, actually people racked up even more debt.
Right, correct.
So it wasn't, it's a little bit like a city with no parking tickets, right? Like eventually, unfortunately, it will lead to not great parking. So what we've tried to do is to set some late fees that there is good that there's some consequence for the consumer of not paying on time, tends to lead to people being a little bit more careful about how they use the product. But obviously what you want to be mindful of, and we've seen tons of examples of payday lenders and all types of not so healthy credit providers throughout the history of these services. If a company becomes reliant on these fees or builds too much of like their income from them, that can make a company over-index on those things, and then that can create a very unhealthy product and so forth. So it is a balance act where we generally...
I feel like I should translate that for a non-business audience.
Yeah.
So basically, if you start over-relying on penalties, after a while, your customer penalizes you.
Exactly.
Basically.
Thank you. That's a very... I'm going to borrow that description if I'm okay with that, because it was a much better way to put it.
That's okay. But I guess the reason why I'm focusing on that is because while it sounds... There are lots of ways you're describing Klarna that makes it sound, as you said, can it be healthier than a credit card? But then there are lots of ways that, as someone who grew up in college when everyone was like giving away credit cards and we all got into credit card debt, it does sound very similar, because at the end of the day, it is about frictionless purchasing, right? It's about taking away those moments where you might say, do I need to buy this or not? Because it takes away the, can I buy this or not? And in that way, it feels, I don't know. This is my inner bank teller coming through. I was a bank teller in high school. So I became very intimate with like kind of the people who would come to the window who had very little left. And the friction of asking and that moment, and even sometimes the shame involved in that, was the discipline. Buy now, pay later just takes all that away.
Yep.
You don't have to feel embarrassed. You don't have to feel shame. You don't have to engage in any kind of discipline to get what you want in that moment.
Yep. Yeah, some people argue that. I would though say that like when you swipe your credit card, there's not a lot of shame in it either. And also actually the opposite. They try to make it look fancy and cool to swipe that platinum card or whatever it is. So like, I don't think that exists. Maybe you would argue that when you sign up for that card, there's a little bit of like shame associated with it. Or like some kind of friction point.
Or reality, right? Because your credit report is going to impact that. If you've been delinquent in all kinds of payments and you go to get another credit card and they say no, that's a point that says to you, hey, I'm not good at this part.
Yep. No,
maybe I shouldn't have credit. And this, for instance, doesn't have a hard credit check. So you're able to get involved in the credit economy very easily.
That's true. But I would actually argue that if you look at it, I think, again, that there's actually a big difference. Like when you apply for your credit card, they will check your income and they will give you a very high limit. Like they may give you like, $2,000 or $3,000. Like that's not actually how we do it. So what we do instead is we look only at the single purchase you're doing. So let's say you're buying for $80 or $100 and we take a decision for that $100 only. And then if you show that you pay back that $100, we may extend another $100. And we take a decision transaction by transaction, which the credit card companies don't. And this is actually one reason why the losses are lower, because we're looking at it like over time on how people use these products and whether they're using them in a responsible way to make sure that like people don't overextend themselves on the debits on the credit side, right? While the problem for the credit card companies is more often that they want you to overextend because they want you to build that revolving credit that, they have $5,000 that's running at 20% interest. So the incentives are just slightly different.
And to your point earlier about the credit cards, the credit card companies actually have to report a fair amount of information, right, to the credit bureaus. I know that Klarna has done some reporting in certain markets. Reporting is not universal in this industry.
No.
And there are a lot of financial experts that are like, we actually don't have our arms around how much debt is out there with BNPL because you guys aren't having to report it. So, that's nerve-wracking as someone who lived through the sort of too big to fail, period of the housing loan crisis, that there could be a kind of burgeoning debt that people don't fully understand.
Yeah, so it's not entirely true in the sense that Klarna, as an example, is a bank in Europe and we're fully regulated. So we need to report all our balances, including our American ones. But I do agree with you. And I think that there is, to me, it's funny, people sometimes say, that I'm pro-regulation, sometimes anti-regulation. But I'm in general, I am a big fan of, capitalism, but I'm also not an anarchist. I don't believe that a system without rules makes sense. And I think financial industry and banking requires some rules. And in Buy Now, Pay Later, when there was a government that was more pro-regulation, we agreed. And now there seems to be a government that's more anti-regulation for banks.
You mean here in the U.S.?
Yes, as an example,
yes.
right? But,
right. And not just that, I think the Consumer Financial Protection Bureau has been dismantled, right?
Exactly,
so even some of the
and
new rules around BNPL, I don't know who's going to enforce them.
Yeah, but I mean, in Europe, where we have also been very involved in the regulatory environment, I always said that, I think some rules make sense. I don't think anarchy makes sense in financial services because you do need to realize that not all consumers are always going to be fully educated and fully aware, and some are going to be in, to your point, vulnerable situations. And I think if it's an entirely rule-less system, it's going to malfunction and it's going to lead to bad practices and bad businesses. If you, however, regulate poorly, you might get the opposite, which is excess profits that we see in banking, where banks are making too much money because the barriers of entry are high, and it's over-regulated as well is not necessarily the solution. So the delicate challenge for government is to find the balance between the two, right? And I think when it comes to Buy Now, Pay Later, I'm not particularly, I know what the objective of Klarna is, which is to build a healthier form of credit. I know we are consumers coming to us and saying, oh, it's odd, my mom is criticizing me for using Buy Now, Pay Later, but she's using a credit card at 25% interest and I'm paying down in installments at 0% interest. Who's the smarter one, right? I get those comments as well. So there's conflicting, views of these products.
It's generational for sure. Yeah, Gen Z and millennials are using it way more in the US than older generations.
Right. So that happens. But I think that so I know what we want to accomplish with Klarna, but I also see that there are other players out there who may have different objectives or be more profit hungry in the short term and may overstep and do things that are more harmful to consumers. So that's why, in general, when we've been talking to regulators, we encourage that there are some basic rules in place.
There's two bits of recent news I want to tackle for a second, but I was taking a look at that earnings report from the first quarter. Klarna lost nearly $100 million in the first 3 months of the year. That's up more than 50 million since last year. And I understand some of that has to do with you're getting ready for an IPO. We'll talk about that in a second. You had some restructuring costs because you're we're going to have AI workers, or are we? But some of it is because people aren't paying back their loans, correct? And is that a sign for someone like me to worry about in this economy?
We haven't seen in the US that losses have increased to what we would call macroeconomical factors. We have not seen that. I'm not saying it's happening.
So translating that, you haven't seen high rates of people just ditching the loans altogether.
No. What you are seeing in Klarna specifically, as an example, one reason they're growing is because in general, we have everything else equal, higher losses in the US than we do in Europe. Everything. It doesn't mean they're high in the US, but they're higher. And as US is our fastest growing market at this point of time, with over 30 million users and high growth and so forth, it means that compared to, because US was a smaller proportion of our business a year ago, our losses are going to grow a little bit faster just because the US is becoming a larger proportion of our business. But if
But
you
what
look
does
at
that tell
US,
you about the U.S.? Because you want to do more business here, right? And already our signals are, can we even pay on time? Right? I
think
mean, I
that
don't mean to single us out, but like
It's-
that's kind of the signal you're sending me here.
inherently, again, what we've seen over time, I've heard like when we started only in Sweden, then we went to other markets. People said, this is only in Sweden, this is only going to work. Then it was like only going to work in Germany. Then it was only going to work in the UK. Then it was only like, over time, we've seen the same thing happen over and over again, which our losses come down to very, very healthy levels in every market when we have been there for a few years. And
So taking it out of Klarna then, because
Yeah.
I think the thing I'm trying to get at is
Yeah.
when we cover business in the U.S. and we try and look at an array of the consumer confidence index, right? What businesses are doing, we look at debt. And we try to see if people are paying their bills and if they're paying them on time. And when we see data points like this, it raises at least a yellow flag. And should it?
In my opinion, not by the data I see for the US in our volumes, and we're pretty big in the US. But if you look at, to your point, the macroeconomic factor, I think it's very clear that what happened during COVID was there was a lot of money from the government. A lot of people managed to pay down the credit card debt. And then you have to remember, like a few years ago, credit card debt in the US was at record low, right? And then as like we reverse back from that, some people forgot the benefit of being low in debt. And we've seen like an over-indexing again. And now credit card debt is at record high. So I am worried that generally speaking in the American society, there's a larger risk of a recession and, more people over-indebting themselves. But you have to remember, I've been doing this for 20 years. I took Klarna through the 2007 financial crisis and so forth. And I've seen the benefit that Klarna has is that when macro changes, when people, when things get worse in the economy and stuff like that, for a regular bank, they have all these credit card debt that's been sitting there and it's going to sit there throughout that financial crisis or at least depression or, whatever it is going to be the worst.
Yeah, but Sebastian, I spend all my time looking at recession tea leaves, right?
Yeah,
like
exactly.
I'm trying to figure out
But-
what's coming.
Yeah.
And I'm bringing this up to you because, Klarna was supposed to have an IPO.
Yep.
And I'm under the impression, please correct me in this moment if I'm wrong, that you didn't do that because of the uncertainty in the U.S. economy under this administration.
That would be to take it far. Like I think that like we happen to, we have been in the works for an IPO for quite a while, and it's been something that we've been planning to do. Now, obviously, as any company, you're going to look for, let's say, a more stable environment. And as we all know, for the last few weeks, the markets have been fairly unstable. So it doesn't necessarily hasn't been the best conditions for that. I think now we're seeing they seem to stabilize again. And that would give us the prerequisites to IPO. But it is not as much as media wants to make the connection to, the macroeconomical. That is not true in our case, at least. But, people will still draw their own.
I can see why, because in layman's terms, I hear us saying the same thing,
Yeah.
which is I'm like, things seem uncertain because of moves by our government. And you're like, things are uncertain in general. But either way, things are uncertain.
Yeah,
When
that
are
is
you going to
true.
do this IPO then? Is
Yeah.
there anything that you would hear in the U.S. market that would make you feel more comfortable?
No, I think that it's just bound to happen. I think again, people in media tend to think that Klarna, we set out already decades ago. When are we going to IPO? We're going to IPO when we're a global company with a profitable business in the U.S.
You have 100 million active users.
Yeah, exactly.
And 700,000 merchants globally.
Yeah.
People are waiting. They want this
I get it.
IPO.
But we weren't profitable in the U.S. until 1.5, 2 years ago. And at that point
Okay.
of time when we accomplished profitability in the U.S., I'm not talking just about, being available and growing and having consumers, but actually making money. That's when we decided, okay, now it's time to prepare. And since then, we've been working on it. And when the market conditions will be right, we will IPO in the U.S.
When you think back to that 23-year-old, could he or would he have used Klarna? Because when I think back to when I was 23, I can actually remember going to an ATM and there being so little there that I had whatever threshold there was, I couldn't take money out. And boy, did that impact my choices and how
For
I
sure.
did spending.
I
Right now, that wouldn't have happened to me.
No, that's totally right. But I also remember when I used to go on the train and I didn't have any money on my debit card and I would be able to swipe it because the card readers at that point in time weren't connected. And I would end up with an overdraft fee that was
Right.
twice the price of the ticket. And at that point of time, to have given me interest-free credit would have saved my life. And we know that there are consumers that like this interest-free credit to them is actually a very, very attractive option to other alternatives. Now, that's one thing. I also remember first time I got a credit card and I overspent that month dramatically because I felt like
Yeah.
I had both my pay like my money on my account plus the credit line. And then I ended up falling into the trap of the credit cards when I did that. And it took me some time to get myself out of that. So again, like those are my experiences. And I think that like the products and again, that's why I'm always saying that like, you know, if I'm not, we're fighting fire with fire here. Let's be honest about that. Like we're fighting fire with fire. Like we're fighting credit with credit. And so it's easy to criticize us for saying, yeah, but it's still credit. And you will be right. Like it's right. But it's turned out that fighting fire with fire is actually quite effective. Like, you know, you burn off a little bit so you don't burn the rest. And like,
Yeah.
the
I'm
point is-
gonna keep meditating on that because I
Yeah.
think the part of me that feels like it's fire and fire for you guys, but maybe we get burned
Yeah.
in the end because this psychology around our spending is so different. It is so different. Like we are still in an economy where people are spending like crazy. When we had an inflation problem in the US, it's because we were spending like crazy.
Right.
And I have to wonder, there's literally nothing to stop you from spending.
Yeah,
And
but do
almost
you have a
any
credit card?
credit, I do.
do you
I
have debt on it?
I do. In fact,
Maybe
I have
you would have
multiple
less.
cards. Would I?
Maybe
Or would
you
I
would have
just
less
maybe
if
I
you
would
had
just
a
yeah, but
debit
then,
card and a little bit of Klarna buy now, pay later.
but also maybe I would have bought more things, smaller things, because I'd say to myself, it's just 4 payments. My brain would not go, hey, but what about your other 2 credit cards? In that moment, my brain would go, it's just 4 easy payments.
You think
And
so?
it's just-
I think it's still compared to like a credit card, like I have unlimited money on this thing, like it never stops. It's still like, it's such a, to me, a concept that is so much more likely to drive me into spending more than I should. Than
Yeah.
if I like always being asked debit or credit, and then I choose credit very cautiously and consciously on that purchase. So again, I mean, and that's why I said like, we don't argue that this is necessarily a better product for everyone, but we see clearly with those self-aware avoiders, the people that did overspend, that are tired of the dirty tricks of the banks, but still occasionally need a little bit of credit. They seem to favor this product and find that it's less, less likely of putting them in over-indebtedness. It's cheaper to use than the credit card because it doesn't charge you interest rate and hence seems to lead to that. But we don't necessarily mean that that's true for everyone.
Leave me with what you're looking for going forward. I don't know if there's a magic number of risk and credit losses or delinquencies here in the US where you'd be like, well, okay, wait a second, this is not to our benefit now, right? Because that's you taking the hit. I don't know if there's something about the economy in general. I don't know if it's when you do this IPO. But what are you looking at now and what are you going to be looking at in the next couple of months that'll give you an idea of our financial health?
Yep. I think that the it's one thing if you look at like micro, macro. If you think about macro in the US, the thing that I am
Which
mostly
is the
looking.
big picture economy for people.
Thank you.
They hear the
You're
word
right.
macro, big
Yeah.
picture. Yeah.
Yes, exactly. I think that there I am mostly focusing on what's happening with the jobs because in the end, it's the jobs that impact whether you can pay off or not, right? And if you look at the jobs, I'm concerned that AI may start having an impact on the employment rates in the US.
And we
the
should say,
question
you
is
say
how-
this as a person who actually tried to do some restructuring where you used more AI
Yes.
rather than workers.
True, and we have also despite mixed writings about it, but the truth is we were 5,500 people about 2 years ago, and we're 3,000 now. So we are, and we're a significantly bigger business. So we have been able to utilize AI to become fewer to do the same amount of, or even more work, right? And I think that is becoming a reality, and it's different this time around because maybe, as I remember as a kid, when things got worsened in the economy, it would usually hit blue collar workers. You would hear now they have they have let go of like a lot of blue collar workers, right? Like that was always the thing. People lost their jobs in the factories.
Yeah. Or for the record, the bank.
Exactly. The bank,
and no one's coming to a bank teller anymore. So glad I found another line of work.
I think this time around, the risk is that, and I hear that now as I hear a lot of like, manufacturing companies announce, they're not touching their blue collar workers. Like all the factory workers are staying, but they are reducing the size of their headquarters, their offices, the knowledge workers. And so the white collar jobs are at risk this time around. And that obviously people in general tend to make more money, be maybe more middle income and high income than lower income in generally speaking. And that is something that I'm keeping an eye on. Like, is that going to happen? And we know that already the changes by the administration has been to let go of people in the federal jobs, right? There has been some that, but so far that has not seemed to have impacted the unemployment rate or the job employment rate in the US. But if the combination of that and AI could lead to more jobs, so that's something I keep an eye on. I'm a little bit worried about to see how that develops in the coming months.
Is there anything you want to ask me as a nosy reporter who's been banging on about your company for the last half hour?
No, I think we're good. I've already asked you if you have a credit card, and I feel like I've already asked you some personal questions on this call.
No. I'm glad you did, because can I tell you something?
Yeah.
When I first heard of BNPL, it made me think of something from when I was a kid, which was layaway. And layaway was what? Did you do layaway? How poor were you? I feel like this is something we can bond over if you ever did it. Or was that an American thing?
It was an American thing, but I'm very familiar with the concept, yeah.
Well, it let you do this thing you talked about. You got to touch the product, right? Your mom wanted to buy you this shirt or jacket, and what they did was yank it from the shelves so no one else would buy it. But you at least got to know, and then it went behind the shelves and behind a counter, and you would come and pay in installments. But it wasn't frictionless, right? Like even standing in the layaway line was like if someone from school saw you, it's like everyone knew you couldn't afford your clothes. Again, I feel like this destigmatizing credit is a good thing, but it has created a very serious cultural consumption obsession.
Yep, I think you're right. And I think there's like, unfortunately, you wish there were a silver bullet solution to things, right? And the truth is probably that like maybe it got better, but it also got worse, right? Like that's the conclusion. I think also though that you have one thing that I always think about as well is that like if I think about when there would be 1 or 2 weeks before my salary where I didn't have any money on my account, right? And the question is like, how did I act in those situations? And there was a lot of situations where a little bit of credit there, if interest free, would actually have been beneficial. So like, for example, when we went to the grocery store, maybe we bought like a single package of something instead of being able to buy the big pack, which would have actually saved us, especially if it was interest free. And people with credit cards had that option and we didn't. And it actually made us take a lot of bad financial decisions. And I think that like there's an interesting study in the US that shows that credit cards in the US is the most effective income redistribution mechanism that has ever been created, because credit card companies charge 2-3% for using credit cards. You're not allowed in the US to charge as a store extra for people swiping their credit cards. So you raise your prices. But that means that your debit users are paying higher prices in the stores to fund your credit users, who are generally people of high income. And actually some people calculated that it redistributes about $350 from lower income households to higher income households, the whole credit card system. So again, I think it is a system that requires a little bit of like competition and alternative thinking.
No, for sure. And I'm glad you brought that up, because there are so many ways when you are working class or poor that you spend more in weird ways.
Yeah, exactly.
Right? Like life costs you and your family more. I don't know if you grew up this way where you're like watching your parents trying to make that math work.
Yes.
And you just live with it forever. Like I always have this sense of like, do I have enough? Am I managing this stuff?
That's it. My parents overspent it on their mail order catalogs, and they were paying like 30% interest of that and stuff like that, right? So again, I think it's sometimes also when you have more money, easier to forget about that there were situations where actually the lack of money made you take worse decisions and put you in worse stops. And so again, as I said, like I feel that the product that we supply is actually a healthier alternative. But as any credit product comes with risk of overspending, indebtedness, or to your point, making it too easy, too accessible, or may encourage people to incur more debt than they should. And so it is a delicate balance to try to balance those two things and think about like how do we provide these services in a way that makes sense. And I think that comes back a little bit to how long-term you are. I mean, when I started this company, I was accused of like, I just wanted to exit and sell it quickly and move on with my life and make a lot of money. I think 20 years into it, people start recognizing that maybe he's a little bit more long-term than that. And I want to disrupt financial services. I want to build better banking services for consumers that are healthier and better. And I'll be here hopefully another 20 years trying to, prove that this model actually leads to healthier outcomes. Not everyone needs to buy into it, but not everyone needs to use the product either. So that's like a little bit up to people in the end, right?
No, I appreciate that. And, thank you so much for talking with me and talking at length.